I'm Riley Judd.
And I'm Timothy Holloway.
I know about games, programming, and design.
And I know about history, folklore, and food.
And today we are talking about the stock market, which we know marginally more than nothing about now.
Yes, we spent the past while trying to research it, past few hours of our lives, and we've got a little bit of a handle.
A little more than past just a few hours. It's not like we were just like 4 hours before this. What is the stock market?
No, definitely not. But
for all
over
those,
the span of a few weeks, we've been putting some study into it.
Yeah. For all those who guessed it, congratulations. For all those who didn't, that's okay, because now you're about to be rewarded with a lovely episode.
Yes, lots of learning to happen in the time to come.
Yes,
the episode.
Indeed. So, I believe we will start out with kind of the history of the stock market.
Yes, we will.
Timothy, if you want to take that away.
Yeah, sure. So, first stock exchanges. Wow, that's going to be really hard to say throughout this entire thing. Yeah. Okay, maybe it's just hard for me.
That mic does psych damage.
Yeah, you know it. But we can trace stock exchanges all the way back to the 1530s.
Right.
So the first one that we found record of is in Belgium, in Antwerp. So these moneylenders, these brokers, these businessmen would meet and gather, and they deal in business. They deal in, government stuff. They'd kind of issue like, you owe me, so you're indebted to me. So here's this certificate that shows that you're indebted to me, which means I can come collect.
Yes. Stuff
like that. Sort of like promissory. Oh, hey, in my notes, there's a little promissory notes thing.
But that wasn't even the only kind of thing that was happening there.
No,
it was really mostly just a market for trading goods, but people were trading and getting goods based on the anticipation that prices for said goods would go up. So it was like stocks in a single item.
Right, but there were no actual stocks yet.
No, not
yet. Which is really interesting. But continuing on, we will get to where there are actually stocks. A popular thing to do back in this day was to finance voyages.
Yes.
In a way. So voyages, they would put out that, hey, we're going on a voyage to get all these big ticket items. We're going to go to the East. We're going to go to India and China and see if we can bring back some luxury goods, because trade was not as open between the countries in the West and in the East yet. So these voyages would be like, we need people to invest in us. Traditionally, what would happen is investors would contact them and be like, yeah, okay, I will invest in your voyage if, and only if, I get this much after you get back. And that's how a lot of people made money on these voyages. But it was risky, it was dangerous, there were pirates, there was bad weather, just overall the uncertainty of sailing. People have always been afraid of the sea, and kind of for good reason.
Yeah.
It's scary on occasion, but so cool. Different episode. But this was a dangerous thing for people to invest in. Here come the East India companies.
Yes.
The Dutch, the British, the French, they all had these companies show up that were called the East India Company, specializing in trade with the East and with India. Shocker. Yeah. But they started to get charters, which kind of made them a bit more powerful, a bit more established, I guess is the best word for that.
Yeah.
And so they started changing the way that people would invest. Instead of investing voyage to voyage, they started investing in the company, meaning, okay, so you won't get as much. Let's say Riley here is investing in a voyage.
Yes, give me money for your adventures.
Yes, his voyage gets back, he gets a lot of money all at once. Great. The East India Company instead changes this and says, okay, Riley, well, you invest in the company, you won't get as much at one time, but instead, over the course of all of our voyages, of which there will be many, you will get a little portion of what we make.
Yes, and I go, that's nice, that's good. I'll take long-term gain.
Exactly, yeah. People were like, okay, I can get behind this. And so people started investing like that in the East India Company, and they started getting paid dividends on all the proceeds from these voyages. This is where concepts like joint stock companies were formed, where the stock wasn't just held by one person. No, this was something that multiple people could take part in, and it was all a joined force that you put all your stocks together. That's the company.
Right.
But a bunch of people had these stakes in that company. Now, for ease of transport and trading, they would give out these shares on piece of paper, right?
Right.
But say somebody was like, okay, well, I invested in this a while ago. It hasn't gone well for me. I need money now. What can they do?
Burn it.
That's a bad plan. But instead, what they can do, they can go to their neighbor, or they can go to a central market. Like, I don't know, that place in Antwerp where a bunch of people are trading.
Right.
And they can be like, hey, I have this stock in the East India Company, and I'd like to sell it. Well, some other well-to-do person might be like, hey, this is a great idea. I will offer you so much money for this. And there we have a little auction started if somebody else is interested,
Mm-hmm.
And that is how sort of trading stocks works in a way, in a very simple, old-fashioned, albeit way.
Yeah.
Now, fun fact about this, a lot of stockbrokers and a lot of traders and such, they did their trading out of coffee shops and places like that.
Oh.
So before there were the big floors with, all of the people running around yelling, hey, I'll sell you this, I'll sell you this. No, it was just cup of joe. Hey, you want some stocks? Ooh, that sounded like some kind of creepy alley salesman.
It's the less creepy cousin of it, just in coffee. Just,
yeah.
My good sir, would you like a stock? What?
That was a fun accent.
Thank
you should
you.
do that more often.
Nope.
Yeah, no,
Moving on.
Moving on, yes. Things really got heated when the British East India Company was really doing well.
Okay.
So they started making a lot of profits. They started bringing in a lot of money. And the people who had those shares, they were like, well, this is fantastic. I'm really enjoying that I did this. Whereas the people around them who hadn't done that, they were looking on and saying, I want in.
Right.
I want a piece of the pie here. And so it was decided that there would be more shares issued. Now, this happened and it went well for a time. But then things started going poorly. Not all the voyages went well. This kind of monetary growing cloud kind of dissipated in a way, which led to a lot of people being out a lot of money. Because as the ships weren't bringing in money, those pieces of paper became just normal pieces of paper. They weren't promising much of anything.
Right. Now you burn it.
That's when you burn it.
Aha!
Got to keep warm somehow,
Exactly.
But that caused a big crash in that company, a big crash in that trading market. And it actually resulted in the government banning issuing of shares for a long time, up until 1825 is what I'm finding here.
All right.
Meanwhile, hop across the pond to the Americas. Late 1700s, there is a small group of friends and merchants who decide to make the Buttonwood Tree Agreement. Now, what they would do, they would meet, they'd buy and sell stocks and bonds, and this is what became the origin of the New York Stock Exchange.
Mm-hmm.
The one you hear about every day on the news, on multiple news channels and sites and whatever you listen to.
Yes.
It's probably mentioned at least once a day. Now, they were considered the inventors of the largest stock exchange in America, frankly, but they weren't the first.
No.
The Philadelphia Stock Exchange had already been there, founded in 1790. They had a significant impact on the economy of the city of Philadelphia and the global economy, and it really sort of pushed people and encouraged people to expand west, because if things were going well, then push your luck, go further.
Right.
Yeah, and from there, Philadelphia and specifically New York just really kept growing.
Right. So, Philadelphia was more official than the Buttonwood traders at the moment.
Right.
So, they actually visited the Philadelphia Merchants Exchange to mimic their model. And this is how they ended up going from the Buttonwood Tree Agreement to the New York Stock and Exchange Board. So once they made the change, members had a dress code, and you had to get a seat in the exchange before you were allowed to participate. And there was also a fee, which started at $25 in 1817, but was raised to $100 by 1837.
That's a big jump there.
That's a fat jump. So eventually we started to get more of these stock exchange looking agreements. So in 1896, we get the Dow Jones Industrial Average, which was created with 12 initial components, which were mainly industrial companies, but more on Dow Jones later. So finally, we get to 1903, where the New York Stock Exchange officially opened with 100 stock certificates held in underground vaults. So this was the beginning of what is to be the largest stock exchange in the world. So a few decades later, in 1923, we get another person throwing their hat in the ring. We get an early version of the S&P 500 index created by Henry Barnum Poor's company, Poor Publishing. We will get a lot more into what the S&P 500 index is later, but just know that they were tracking 90 stocks in 1926 and keeping track of, their rises and their falls in prices. So in 1928, the stock market was surging. Everybody was getting into stocks, despite the inclinations that there was an economic downturn coming. But people were just going in. They were really pushing their luck with these stocks. And then in 1929, the U.S. stock market crashes.
All goes down the drain.
It all goes down the drain, leading to the Great Depression. It was all caused by Black Thursday, the day the market dropped 11%, which caused every investor to panic. And it was just bedlam from there. But they took the time and they started building the economy back up, and we eventually got to a better place. In 1941, Standard Statistics and Poor's Publishing, they merge into Standard and Poor's. So that is how we officially get the S&P 500 index, when those two companies merged together. Because originally it was just Poor's Publishing who had the index. So in 1971, trading begins on another U.S. stock exchange, another hat thrown into the ring, the National Association of Securities Dealers and Automated Quotations, otherwise known as NASDAQ. I should have looked up how to pronounce that. I always stared at him like, NASDAQ.
Not
NASDAQ.
Quite. It's close though.
Yeah. All right, so NASDAQ. So they joined with the International Stock Exchange based in London, which became the first intercontinental securities market. So that is when things start to get really worldwide in the world of stock exchanges. And then we are gearing up for our next economic downfall. In 1987, you have corporate buyouts and portfolio insurances, which are helping prices in the market run up until October 19th, or Black Monday this go around, which caused another downturn in the economic scene. And then we get another economic downturn after we fix that one, when we hit 2008, when the stock market crashes after the boom and bust of the housing market, along with the proliferation of mortgage-backed securities in the financial sectors. So basically, house monies, everybody was in on it, and it didn't make the returns.
Yeah, no.
Yeah, so this is known as the subprime mortgage crash. So that about gets us up to present day.
Yeah. It's a long history of just different ways that these stock exchange boards just get stronger, and how the power of these stocks just keeps rising.
Yes, and sometimes don't make the returns, and that causes everything to catch fire.
Big problems, yeah.
Big problems. It's wild. So we did bring up the New York Stock Exchange quite a bit. It is the largest stock exchange in the world, but now there are major exchanges in cities all across the world, which sell domestic and international stocks.
Right. Just about any nation has some sort of stock exchange, I've found. So you got New York Stock Exchange, you got NASDAQ, you got Shanghai, Hong Kong, Stockholm. Because, Amsterdam. Stockholm, why is your abbreviation OMX. I could not find that.
Hey. That's for later.
Oh, yeah, but
we ask them questions later.
We can ask them questions now.
No. Okay. So, with all these stock exchanges, it could be kind of tricky to keep track of how things are going, generally speaking. So that's why there are benchmarks or barometers that try to capture the performance of the whole market and even potentially the whole economy itself. So when it comes to, namely America, the two most famous are the Dow Jones Industrial Average and the S&P 500 Index. So the Dow Jones Industrial Average is price weighted. So the higher price per share stocks influence the index more than lower price stocks. And it is made of 30 very large US-based stocks. It's meant to be more of a proxy for the overall economy. So by looking at the Dow Jones, you can get a good idea of how everyone overall is doing. So the 12 initial components were mainly industrial, as I said earlier. Gas, sugar, tobacco, oil, railroad, that kind of thing. But now we got things which include technology, healthcare, financial, and consumer companies added into the Dow Jones average. The S&P 500 is market cap weighted. So in this one, companies with higher market value have more of an influence on this index. So the market value, or the market cap, is calculated by multiplying the price per share by the number of shares outstanding. So you take the number of shares and you multiply it up by the price that they are being sold for.
Makes sense.
Yes. So for many, the S&P 500 has just become synonymous with the stock market itself. So people will just say stock market and be referring to this particular index. So it's worth noting that the markets can fluctuate on any given day. They are always rising and falling. And the US stock market has historically gone through large market cycles in which the market expands and shrinks over the course of weeks or even years. So despite its relatively volatile nature on the day-to-day, it's not catastrophically volatile, if that makes any sense.
Yeah, it definitely does, because while it does always change, there is a certain sort of almost brackets that it almost always stays between. And then when it goes out of those, that's when things people start getting nervous.
Yes. So there are typically 4 stages to a market cycle. You start with accumulation. So when the market is at a low, buyers begin to snap up all these stocks at the discounted prices, because that's when you buy, when they're cheap. So then you get markup, which is when you have all these buyers coming in. Well, then the people can start raising the prices of their stock because demand has risen. Then you get the distribution phase, where the sentiment of buying versus not buying becomes mixed. So some people are saying, no, keep buying, it's still time. Some people are saying, no, this is not the time to buy. Do not be spending your money on this. And then you hit the markdown phase, where people officially do stop buying and the prices of your stocks plunge. And you just go through that cycle over and over and over again.
Right. And a lot of that is pretty much dependent on how willing you are to be how willing you are to be risky with what money you're putting into this.
Right.
So like if you're willing to live life really on the edge, you might wait as long as you can before you buy something, because you think, oh, hey, it's going to keep going.
Yeah.
It's going to keep going. And then if you time it wrong, which frankly, it's really hard to time at all.
I know.
It might end really poorly for you, but it also could end really well.
This is true. So the stock market, so the actual market of stocks that are being bought and sold, works through a network of exchanges, such as the New York Stock Exchange and the others that we have listed. So stocks get listed on said exchanges through a process called an initial public offering. So when this happens, investors will purchase these stocks and the money helps grow the business itself. Then the stocks are bought and sold among various investors in these exchanges, and the exchanges track the supply and the demand of the listed stocks. So a buyer, the investors, they're going to offer a bid, which is the highest amount they are willing to pay for any given stock. it's usually lower than what the seller is asking for these stocks. So the difference is known as a bid-ask spread. To get the trade to finally go through, either a buyer needs to increase the price or the seller needs to decrease theirs. But once you make that arrangement, then the trade is officially put through. So the stock trades used to take place in a physical marketplace. As Timothy said, you used to have floors of people just running around trying to get these stocks traded with each other.
It's absolutely like chaos.
Just absolute chaos. But now, thanks to the digital age, this mostly takes place electronically through the internet and online stockbrokers. So while trades are done by stock basis, overall stock prices often move together thanks to outside factors such as current events and news.
Yes, like we're recording this, coincidentally, on Inauguration Day.
Yes.
Historically, the stock market always has some sort of change going on whenever a new president or world leader is elected.
Yes.
It's just one popular day for it to go kind of wild.
Yes. So the major events will have an effect. But even smaller than that, on a stock-by-stock basis, you are going to have fluctuations for whatever breeze brushes by that company on that day.
Yeah, really, though. It's very much it's always moving, always changing. Never know what it's going to do.
Yes. So let's say you're listening to this and you're saying, wow, that's really cool. I want to get into the stock market. How should I do it? Well, don't worry, lovely viewer. We will let you know right now. So, there are multiple ways to start getting into the stock market. So, it's worth noting that if you have a 401k through your job, then you are probably already invested in the stock market through mutual funds, which are often included as a part of your 401k. So, that is worth looking into. However, if you are looking for, stocks outside of things such as that, then individual stocks can be purchased through a brokerage account. So you have to be signed up with these accounts or you cannot participate within the exchanges. So you can go to an online broker. I believe can go to a physical human broker.
You can, yes.
And then you also have nowadays the popularity of robo brokers, which are apps and websites which do a lot of this in a more automated fashion. So, with your brokerage accounts, you can get an individual retirement account, or an IRA, or a taxable brokerage account if your retirement funds are coming from elsewhere. So the broker then acts as the middleman between you and the actual stock exchanges.
They're the ones that kind of help you make sure that you know exactly how much you're pushing in there without actually having to do a lot of the paperwork stuff yourself, is how I understood it.
Yes. And that's where we start to get into the differences between, the websites or the people or the Robo Advisors. Robo Advisors have taken off in popularity, though a actual broker is probably going to have more detailed information for you. They are going to ask you many, many questions about what you are looking for getting into the stock market. And based on your answers, they are going to help you put together a stock market portfolio, which you then set aside and wait to see grow into fruition.
Right. Much more of a hands-on approach, much more personalized and customizable.
Yes.
Sounds like.
With Robo Advisors, it's more hands-on in a completely different fashion, where you are the one who is getting into the trenches and usually trading your own stocks. So these are a far lower cost of investment, and they come at a low cost and help you invest based on specific goals that you set in a less rigid fashion. So when you get your stocks, there are individual stocks, of course, but then there are things such as mutual funds, which let you purchase small amounts of a bunch of different stocks in a single transaction. So this is something that really helps you diversify the companies that would be in your stock market portfolio. Just a note on the mutual funds, there are index funds and exchange trade funds, which are mutual funds that help track indexes such as the Dow Jones average and the S&P 500 index.
Sounds pretty useful.
Yes. So mutual funds tend to be based somewhere around the $1,000 mark, while ETFs can be as low as $100. So that is worth thinking about if you are looking to get some sort of mutual funds. However, depending on who you are going through, say if you are going through one of the Robo Advisors, then you are probably going to be working with more individual funds than you would normally. So some of the more popular broker apps, so Robo Advisors, are Merrill from, I believe, Bank of America is attached to Merrill, I think. E-Trade, Robinhood is one that has been climbing the ranks really quickly, and Ameritrade is another very popular one. So you've probably heard of at least one of those.
Right.
I have a Robinhood account. It's
really?
made me $5.
Oh, nice. Yeah.
Thank you.
It's Candy Bar.
Yes.
Not a sponsor, by the way.
Not a sponsor. Not yet. Who said that?
What?
What? I didn't say that.
Robinhood sponsor us.
But it's generally advised that if you want a more expert hand in your investing, then you should go to a reliable, human broker. However, this is going to tend to be a much heavier investment. You're going to have to invest more money versus your apps and your robo advisors, where you have to do a lot more of the heavy lifting, but you can start out with a lot less money. So, like, for example, me with Robinhood, I literally invested $15, and that's how I've gotten my $5.
I mean, hey, a gain is a gain.
A gain is a gain. So, I think that's what we have.
Yeah, I think so. So, little break, and then we come back with the discussion?
Yes, sir.
All right, stay tuned, and we'll be right back. Hey, Riley.
Hey, Timothy.
Do you remember when we first started this podcast and we had no idea how to get started or do anything with it?
Oh, you mean like how we're still kind of operating?
Almost. Except back then, we had no idea what podcast service to use or how to even step into the world of podcasting.
No, we did not. I knew nothing about starting a podcast.
Well, then let me just say how glad I am that we found Anchor.
Yes, it has so many wonderful things about it that have helped us break into the podcasting gig.
Amen.
The first little bit is that it is free. That was one of our biggest concerns. There is no money required to host a podcast on Anchor FM.
Right, you can get your name out there. And another great thing that they have are editing tools for you to use on your phone, on your PC. You don't have to go out and spend money on an editing software for you to edit your audio. In addition to those free editing tools, they have a whole library of different music and sound effects that you can choose to add to your podcast, all for free.
That's a lot of good free stuff.
It is.
Yes. Another great thing is that they distribute your podcast to a bunch of other podcast hosting sites. So things like Spotify, Apple Podcasts, Google Podcasts, you name it, they probably send your podcast there. So it makes it more accessible than ever to all the people that you want to reach.
And once you get on your feet in the podcasting world, they make it super easy to find sponsorships and get paid.
Yes. So if you are looking to start a podcast, break into the podcasting industry, go ahead and download the free Anchor app or go to anchor.fm to get started.
Do it. You won't regret it.
You will not.
Welcome back.
Yes, welcome back. Did you miss us?
We missed you.
Yes, we did.
And welcome back to the discussion on stock markets.
Yes. So, Timothy.
Yes.
What is something that really surprised you in looking at the stock market?
I guess, in a sentence, the humble beginnings of the NYSE, the New York Stock Exchange.
Yes.
Because the source I found, it was, I think, Investopedia online. So give it a look up. You can find it in our source documents. It just made it sound like it was this little group of merchants that were just kind of buddies. And they were just like, yeah, let's do some trading.
Yes, I'm gonna talk about that a little more later, but it's just so wild.
It is. I love just that imagery of these guys getting together and being like, all right, Buttonwood trade agreement, let's go. And then once it starts taking off, maybe a few more people added, they're like, okay, well, we should probably make this a bit more official. And so they go down to Philadelphia and they check out their exchange program and they're like, oh, hey, this is so much better.
Yeah, we're just going to do this.
Yeah, we're going to do this instead, but up in New York, sorry, by Philadelphia. And then they're like,
And they surpassed Philadelphia.
Yeah,
Oof.
surpassed Philadelphia, and they're like, you got to dress nice now because we're legit.
We are legit.
We're a legit stock exchanging machine. And that ended up becoming one of the largest stock exchanges in, I think, the world. Definitely the largest.
Largest stock exchange.
Okay, that's what I thought.
It's top dog.
I don't have any of my pages up right now, so I can check.
I have mine, so unless someone did me real dirty and I was wrong, they are top dog.
That just blows my mind, but it just goes to show, humble beginnings.
Yes.
Yeah. So what surprised you?
I guess I was surprised to find out that there are multiple stock exchanges. So for the longest time, I had assumed that the stock market was just this monolithic thing that is just the world's stocks just were all compiled into a single stock market. And then all the stock exchanges were just various cities and countries' way of plugging into this giant, crazy monolith of, market.
Right. Like big branches of the same franchise almost.
Yes.
Yeah.
So, and I knew it wasn't always at that point, but I assumed once we, at least hit the 21st century, that's how it mostly functioned. That we just had one giant conglomerate that everybody was buying into and selling into. But that is not the case. They are separate. There are multiple stock exchanges which have some companies, and some companies aren't on those stock exchanges.
Right. And that kind of makes sense when you think about how, say I mentioned the Stockholm Stock Exchange earlier.
Yes.
They have different companies in Sweden than we have here in America.
Exactly.
So it would make more sense for people in Sweden to be able to trade for those stocks when I think we still can via the digital information age nowadays.
Yes.
But it makes more sense for them to actually have it in their exchange there. We have to go through a bunch of, red tape and stuff.
Yeah. But then I didn't really find about how, you have super large companies such as Disney or Apple or Microsoft who they're on pretty much every stock exchange. So how do they manage to get themselves into all of these separate exchanges and markets? So it was very interesting. And it was just so surprising to hear that it was multiple little pools and not just a giant ocean.
Right. So go ahead and look up for yourself sometime the different stock exchanges and the different stock markets, because it's really cool to just kind of scroll through them, see what you can find. So, Riley, what was something you wanted to know more of?
Something that I wanted to know more of was just how this whole system functions, for the lack of a better word. So, I understand how it works, and I understand, it doesn't always work. That is an important note. Sometimes it crashes and it falls. But
thus the Great Depression and everything that came with that.
Yes. So I understand stocks that have dividends. Those make sense to me. So the dividend is when you get paid a portion of the company's earnings based on how much stock you have.
Yeah.
So that makes sense to me. You buy a bunch of stock in a very successful company, so they give you money.
Yeah.
But not all stocks do that. But we're still trading them. You might as well be paying for a tin can and then saying, my tin can is now more expensive because the tin can manufacturer is really cool. And somebody goes, yes, they are really cool. I will buy the tin can from you. And then you give them the tin can, and then in 20 years, you buy the tin can back from them. And it's just trading cards for adults. It's just Pokemon cards for people with money. I don't get how it's still, it just seems so arbitrary, but it's just such a staple to our economy.
I mean, yeah, I don't know why you latched onto tin cans specifically, but I mean, it makes sense.
It's a stupid item. It has no value. It's just a tin can.
Fair enough.
So to think at how this machine is just still functioning. It's just one of those. It's only functioning because we give it the function. Right. And it's just so wild.
I guess the only way I could even think that it might start to get explained is, when you think about how, a stock or a few shares of a stock or whatever, that's part ownership in that company, right?
Yes.
So even if you're not getting paid dividends, you still have that partial ownership. But still, you're right. It has that value because we gave it the value.
Yeah, it's just so weird to me. It's just adult trading cards.
Giving power to a name because we give it the power.
Yes. So, to me, that's just wild, and I'd love to hear a little more about how this boat is afloating.
Yeah. No, same. I don't understand it. And you mentioned how it's what sounds arbitrary earlier. That leads right into what I wanted to know more. Why do we still use the Dow Jones and the S&P 500? Why use these few companies that are on these indexes? I say few, there's a lot. But gauging all of the companies that are on the stock markets, of which there are a ton by these few companies, that just seems a bit outdated to me.
Yeah, it's definitely something that I don't really get either. I mean, obviously, I guess the assumption is if the large companies are doing fine, then the other companies are doing fine. But just that thought of just you have these just few companies who maybe they're having a bad day when everybody else is having a great day.
Right, yeah.
You almost wonder if it's almost a causation thing at this point. So instead of it gauging, it causes it because people see that, the S&P 500 or the Dow Jones is going down. So then the market goes down because they are going down.
Right. And we already know that things work very differently from, really huge companies to the smaller, still large, but smaller companies.
Yeah.
So while maybe Coca-Cola ain't doing well on a certain day, maybe their competitor, this little,
the root beer milk company.
Exactly. The people who make root beer flavored milk, maybe they're doing real good right now.
Yes.
And we wouldn't know because the Dow Jones has Coca-Cola on it. And if they're doing bad enough and other companies on that index are doing bad enough, then everybody's doing bad. And the whole economy is said to do not very well that day.
Yeah. So, I mean, if it just functions a bit as a gauge, that makes sense. Okay, we got these gauges and that's how we're going to see how they do. I think you would almost want to have, almost like personalized gauges. You're going to check these companies to see how your areas, the areas that you want, are doing.
Right. No, that would make a lot of sense.
Yeah. So if you have an entertainment stock index, so it has Disney and Netflix and Nintendo and Sony Entertainment.
Yeah.
That would make sense to me. But to try to judge something so huge as the entire economy based on just a few companies seems a little off.
A little outdated, which I just looked it up again. Charles Dow created the index back in 1896.
Ah, yes.
So it probably worked great back then.
Well,
and I'm sure it works pretty all right now too, or else I would hope they would have the presence of mind to change it.
Yes. I mean, they have changed what stocks are in it, of course.
That is very true.
As I mentioned, so we have some of the more relevant companies, such as, the consumer industries and technology industries. So they have at least changed the stocks with the economy. So what is more important to the economy has made it into the Dow Jones.
Right, which is a very good way to keep that updated for sure. But I just feel especially with the amount of technological advancement since 1896, I feel there might be another way.
I feel like we could just have an index of all of the stocks, personally, or take at least just the New York Stock Exchange. I mean, we're already tracking all the stocks, so just average them ?
Maybe.
I don't know. So then you would have to get into whether or not it would be price weighted or market cap weighted. I think it would. Then there's merit in which would those be. I'm not smart enough to come up with a better system, but
right, we haven't studied stock markets enough to figure that out yet.
We feel like we know enough to say that we could probably be doing better.
Yes. Although I will say it would probably throw a huge wrench in all the brokerages.
Literally everything. Everything would catch
Everybody
fire.
would have to relearn everything they knew up to this point.
Yes.
Which, learning ain't bad. Yeah. It's a great thing.
I mean, or maybe we're wrong and maybe we missed something and they attempted to do some switches.
Ooh,
and
that would
they
be
just
spicy.
didn't happen because they sucked. So we don't know. We are just two, games programming design.
History, folklore, food.
We're not exactly market experts.
No, not really. But we're sure all you brokerage and stock people are doing great out there.
You are doing
Good
wonderful
job.
work. Good job.
Thank you for taking care of a bunch of people's retirements.
Exactly.
Yes.
So I think that is what we have.
That is. Thank you for tuning in for stock markets.
Yes. So make sure you check us out on our social medias for all the updates and fun stuff. We are on Facebook, Twitter, Instagram, YouTube. We're on lots of places. We're all KYN Podcast, so you will find us really easily. If you enjoyed this episode and you want to hear more from us, perhaps maybe some extra episodes, then you can check out our Patreon, where we have some exclusive rewards for our Patreons, such as our side series, Ryle's Reviews and Tim's Tales. So if you are interested in hearing more of our lovely voices, then be sure to check those out.
For sure. And if we got something wrong here, if you want to tell us how much you enjoyed the episode, any of the above, be sure to email us at kynpodcast@gmail.com. And be sure to check out our merchandise site on Teespring in the description below.
Yes, indeed. So now, a hint for our next episode.
Yes.
It's a Timothy Passion episode.
Yes, it is. And let me just say this for the hint. If you don't research this well, we'll be in a pickle.
Be in a pickle. Okay. Pickling. I mean, I think I'll like that. It'll be food, and we're gonna talk about pickling.
You're locking in?
I'm locking in. We're talking about pickling.
All right. Well, come back in a week and see if he's right. Until then,
I guess, drink your hot chocolate, stay in school, and milk.
What?
Milk. Just bye.